Hey folks, what is going on, crypto world? Bitcoin is bouncing back hard right now, and you know we have to talk about it. It is currently trading right around $89,500 after a little dip from that psychologically important $90,000 mark. The market is moving fast, so let's dive straight into the freshest data and break down what this all means for you. As of this morning, Bitcoin is sitting pretty at $89,500. This is a solid rebound from yesterday's lows, which touched down around $88,600. The 24-hour range has been a real roller coaster, hitting a high of $91,183 and that low I just mentioned. Looking back over the past 7 days, we're seeing a slight climb from the $88,300 levels, showing some decent strength. The total market cap for Bitcoin is clocking in at a massive $1.79 trillion, and its dominance over the rest of the crypto market is holding strong above 55%. This tells us that when Bitcoin moves, the entire market still pays close attention. So, let's get technical. The key support level to watch is $88,500. This is the exact spot where we saw buyers step in with force, propping the price up and preventing a further slide. On the flip side, the major resistance is looming right at $90,000. We just tested it, got rejected, and pulled back, which confirms it as a significant hurdle we need to overcome. Looking at the indicators, the Relative Strength Index, or RSI, on the daily chart is hovering around a neutral 52. This means we're not overbought, we're not oversold. The market is essentially catching its breath. The MACD indicator is also showing weakening bearish momentum, which could hint that the sellers are getting exhausted. Plus, the 200-day moving average, a long-term trend indicator, is way down at $85,000, providing a very solid floor of support for the price. What does all this mean for the immediate future? If we can break and hold above $90,000 cleanly, the next logical target is $91,000. Right now, the price action is just screaming consolidation. We're in a sideways channel, building a base before the next big move. Volatility is also cooling off after that recent wild swing, which is healthy. For short-term traders, that $88,000 level is your critical invalidation point. A drop below that could signal more downside to come. Now let's talk about the leverage in the market, because it tells a fascinating story. In the last 24 hours, we saw about $150 million in liquidations across the board. What's interesting is that the longs got wrecked way more than the shorts. We're talking $100 million in long liquidations versus just $50 million for the shorts. This washout of leveraged long positions is often what the market needs to reset. Even more telling, funding rates have flipped negative across most major exchanges. For those who don't know, this means that traders who are shorting Bitcoin are now paying the traders who are long. This situation can create the perfect setup for a short squeeze, where a rising price forces short sellers to buy back their positions, pushing the price even higher. The perpetual swaps market is definitely resetting for a potential explosive move. Let's follow the money and see what the whales, the big money players, are up to. On-chain data shows that whale wallets moved about 5,000 BTC onto exchanges yesterday, which could be seen as a bearish signal, maybe preparing to sell. However, the bigger picture is much more bullish. The outflows from exchanges completely dwarf those inflows. A staggering 20,000 BTC left Binance's wallets alone. This suggests that big players are moving their coins into cold storage for long-term holding. In fact, cold storage accumulation by these large players is up 2%. The over-the-counter desks, where huge block trades happen, have been quiet, meaning there's no panic selling from the big guys. It looks like the whales are professionally stacking the dips, buying up any weakness. And the institutional story? It's even more bullish. The spot Bitcoin ETFs are on an absolute tear. BlackRock's IBIT fund saw another $250 million in net inflows just yesterday. Fidelity's FBTC wasn't far behind, adding another $180 million. Even Grayscale's GBTC, which has been a source of selling pressure, had only minor outflows of $50 million. This brings the total net inflow for the ETFs to a positive $400 million in a single day. The institutions are buying this weakness, and they are buying it hard. BlackRock's IBIT now holds over 300,000 BTC. This relentless flood of institutional capital is a massive, screamingly bullish signal for the medium to long term. Let's shift our focus to the health of the Bitcoin network itself, the fundamentals. The hash rate, which represents the computing power securing the network, is holding steady at a near all-time high of 650 exahashes per second. A high hash rate means the network is strong and secure. We have a difficulty adjustment coming up soon, projected to go up by about 3%, which indicates that more miners are joining the network because it's profitable. Speaking of miners, their reserves are dropping. But this isn't a bad thing. It means they are holding on to their newly mined Bitcoin instead of selling it immediately. Selling pressure from miners is currently very low, which removes a significant headwind for the price. We're also seeing a spike in network activity. The number of active addresses jumped by 15% in the last 24 hours. More people are using the network, which is always a healthy sign. From a valuation perspective, the MVRV ratio is at 2.2. This metric compares market cap to realized cap and helps us see if the asset is over or undervalued. A reading of 2.2 suggests we're in a bull market, but not yet in the overheated euphoric top territory. The SOPR, or spent output profit ratio, has reset back above 1, which indicates that some profits were taken during the recent dip, but investors on average are still selling at a profit, a characteristic of a bull market. And finally, the amount of Bitcoin held on exchanges continues to plummet, now down to just 2.4 million BTC. This supply shock is real. As more coins move off exchanges, there's less available supply to be sold. All in all, the on-chain data is firmly pointing towards accumulation mode. Zooming out to the macroeconomic landscape, things are also looking favorable for risk assets like Bitcoin. The Federal Reserve has signaled that no rate hikes are on the table for the near future. The US dollar index is weakening, trading below 102, which is typically good for Bitcoin. And inflation data is cooling, coming in at 2.5%. This creates a risk-on environment where investors are more willing to move into assets like crypto. So what are the big names in the space saying? Michael Saylor is doubling down, sticking with his call for Bitcoin to eventually reach $250,000. Arthur Hayes, a savvy market commentator, is eyeing a breakout to $100,000 very soon. Plan B's stock-to-flow model, despite some criticism, is still on track for a cycle peak around $150,000. And Raoul Pal, another macro expert, believes this recent dip was just a bull market fake-out designed to shake out weak hands before the next leg up. So, what's my final outlook? The sentiment is cautiously bullish. If we can decisively break and hold above $90,000, especially with these ETF inflows continuing, I'm targeting $95,000 in the short term. The main risk to the downside remains that $88,000 support level. A break below that would force a reassessment. The market has been building a strong foundation, and the combination of institutional buying, on-chain strength, and a favorable macro backdrop is hard to ignore. But that's just my take. I want to know what you think. No. Is this the start of the next major rally to six figures? Or are we in for more choppy consolidation? Let me know your price prediction in the comments below. And if you got any value from this breakdown, do me a huge favor. Smash that like button, subscribe to the channel, and hit the notification bell so you don't miss the next update. Thanks for watching, and I'll see you in the next video.